Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. It is Monday, December 30th, just another day or so left in the trading year here in 2024. So if you want to do any trading, make sure you get into the market tomorrow, last day for 2024. Today we are going to take a look at Lamb Weston. This is out of the commercial or the consumer staple sector here. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button down below. Hit the notification bell so you're notified whenever we put out any new content. I do this stock pick of the day video series Monday through Thursday whenever the market's open, so we won't be doing anything on Wednesday. I believe the market's closed Wednesday for New Year's Day. Happy New Year's to everyone out there. Make sure you're safe as people go out and have a good time. Make sure you get an Uber if you need to, and hit that thanks button down below if you're able. Buy me a cup of coffee or a cup of tea. I don't really drink a lot of coffee, but a cup of tea there. There's several tiers. Really appreciate everyone who's able to do that. Special thank you to the subscribers of the channel. The channel continues to grow because of people like you. And this is the Vested Interest Stock Screener. This is the screener we will be going through on this video to see if this makes it onto my watch list. This is the first time I've ever taken a look at this company, so it must meet 5 of 8 to make it onto my watch list. If it was a company out of the financial sector, like a bank or an insurance company, we add in price to book. You can use price to book for any company, just don't blindly use one that really is only tailored towards banks, financial companies, something like that. All right, back to Lamb Weston. Go ahead and check them out at their homepage, www.lambweston.com. That's www.lambweston.com. That is their homepage where I pull this information from. And you may not even know anything about this company, but I would be willing to bet that you've eaten some of their products if you are a connoisseur of any kind of fries, right? Lamb Weston is a leading supplier of frozen potato, sweet potato, appetizer, and vegetable products to restaurants and retailers around the world for more than 70 years. Lamb Weston has led the frozen potato industry in innovation, introducing inventive products for our customers. Lamb Weston products can be found in more than 100 countries around the world. The business is headquartered in Eagle, Idaho, with manufacturing operations focused in the Pacific Northwest, primarily in the world's best potato growing region, the Columbia River Basin. Lamb Weston employs more than 10,000 people around the world in sales offices, manufacturing plants, and corporate offices. And that's really their bread and butter, right? They grow and produce their own frozen vegetables for retailers. So if you've bought, fries, and primarily, when I say vegetables, primarily it's around fries, sweet potato fries, regular fries, all different types of fries. It kind of reminds me of the old, shrimp classic from the Tom Hanks movie. They're oh God, what was that years back? But anyways, all the different types of shrimp. Well, they do all the different types of fries. Forrest Gump was the movie I was trying to think of. They do all different types of fried, right? They've got cut fries. They've got crinkled fries. They've got hash brown fries. So a lot of different fries, sweet potato fries. And then they do some other appetizers, but primarily around the frozen food industry. So again, if you bought frozen French fries, you may have bought Lamb Weston products and not even known it. If you've had some at a store where they're using frozen French fries, you've eaten them and probably don't even know it, as they are the #1 manufacturer and supplier of frozen French fries and some other appetizers that they do as well. Now, the reason we are taking a look at them, down 3.03% on the day. We are talking about Lamb Weston Holdings, ticker LW, closed out the day at $64.97 per share. 52-week range as low as $52.99, as high as $111.88. They are not quite within 15% of their 52-week low. They need to drop under $60.93. So really, if they're under 61, they're very close to within 15% or within 15% of their 52-week low. So anything under $61 per share, really. $60.93, but close enough. Market cap is at $9.267 billion, a beta of 0.71, so they are less volatile than the overall market. PE, price to earnings ratio, seems a little elevated for a company like this that sells French fries, frozen fries. 25.58, $25.58 per share. Earnings per share, EPS sitting at $2.54 per share. Earnings date was December 19th, so we're a couple weeks past that. You can go back and check that out if you want to understand what their last earnings report was. Forward dividend is $1.44. They are a quarterly payer. We'll see that here at the end, what they pay per quarter, or divide by 4 if you want to do the math yourself. Dividend yield is 1.84%, so they are a little higher than the overall market. I really like stuff around that 2% or better. Not that this is below some of the lower yielders that I have in my portfolio, so not a deal breaker, but does come with a low starting dividend yield. Ex-dividend date was November 1st. Looks like their actual dividend payout date is going to be February 28th, 2025. So you would have had to own them before that ex-dividend date of November 1st. So October, the end of October there, really before this November 1. If you bought them on November 1 or now, you would not get this February dividend payout. 1 year target estimate, at least according to Yahoo Finance, $69.79. So they do see some slight upside from here, but not getting back to their 52-week high or even close, really. That's not much higher than where they currently sit as far as Yahoo Finance is concerned. Not affiliated with Yahoo Finance, just one source of information that I like to check out. Jumping over here to the right, I like to look at dividend yield theory to see if there is potentially any undervaluation being presented here. To do that, we look at their payout ratio, 5-year dividend yield average of 1.31%, right? 1.31%. We compare that to the current yield, 1.84%, over here 1.84%, or over here forward annual 1.84, same number. Since it is higher than their 5-year average, that speaks to undervaluation, at least according to dividend yield theory. Now, Yahoo Finance says they have a low payout ratio of 31.92%. I like anything under 75%, so that's very low for my liking. Dropping down, I want growing free cash flow over time, because typically if a company has growing free cash flow, they have a growing dividend to match. Going back here to May 2022, you can see $128 million and some change in free cash flow. 2023 looks like a big drop down to $107 million. 2024 negative $131 million, and trailing 12 months negative $124 million. So really, they've seen declining, maybe slightly increasing here with this trailing 12 months, but over the last few years declining free cash flow, which is not very good to see. Repurchase of capital shares. They are actively repurchasing shares even whenever they're negative. 2022, you can see here 151 million shares and some change. 2023, 51 million, even though they decreased their free cash flow. Same thing here in 2024. Even though they're showing negative free cash flow, they're still buying back shares, 225 million. And the trailing 12 months, even though they're still showing negative free cash flow, they've bought back 153 million more and some change shares there. So I'm not sure that's the best use of their capital to rebuy shares if they're in the negative, but that's what they're doing, it appears. Now, jumping over to stockanalysis.com, this is another source that I go to for information. I do recommend more than one source so you can make sure the information you are getting is accurate and up to date. They do have 13 analysts that have taken a look at this. They call it a consensus buy. Low estimate of $60 would represent a negative 7.65% drop from where it currently sits. Average estimate of $78, that would represent a 20.06% increase. And if it happened to hit their high of $105, that would be a 61.61% increase. And you could collect that, 1.8% dividend yield along the way. I like to jump into statistics here, look at return on equity and return on invested capital to see how well the company is reinvesting its funds back into itself. And looking at return on invested capital, ROIC, I like 10% or better for both of these. We're going to go in opposite order. Usually we look at return on equity first. But return on invested capital, ROIC, is just under the 10% I'm looking for at 9.42%. Return on equity is looking good at 22.24%, beats the 10% that I want. Now, you must beat 10% for both of these to get the check, so they won't quite get it because it's just under return on invested capital for me. EPS growth was not listed, so I can't say whether it's under the 5% that I look for over the next 5 years projected or not. And revenue growth was projected at 6.19%. They are a quarterly payer. Payout ratio. Now, this is why I recommend more than one source, because there is a big discrepancy here between what Yahoo Finance has and what stockanalysis.com has. Stockanalysis.com has them at a 58.19% payout, whereas Yahoo Finance had them in the 30% range. So might look for a third source to see which one of these is accurate, even if you split the difference here and say they're in the 30 to 40% range, low 50% range, wherever you want to say they're at. Somewhere between 30 and that 33% that we saw in Yahoo Finance and 58% there is still under the 75% I look for. Dividend growth, 75% or less. Dividend growth is very high at 20.83%. So very, very fast dividend growth, 8 years of growth. Buyback yield is positive at 0.99%. Shareholder yield positive at 3.28%. They do pay out on the typical payout schedule of March, June, September, December. Going back in time here in August 2022, you can see here 24 cents, some fractions of a penny. February 2023, they raised that up to 28 cents. They raised that up again in February 2024 up to 36 cents. And that payout that is going to pay out in February on the 28th has been raised again from 36 cents up to 37 cents. So not a big raise there, but the last few have been, 8 cents there. 4 cents there. So some nice dividend growth. I don't know that the math adds up right there. If they only went from 36 cents to 37 cents, that doesn't quite seem to be a 20% dividend growth. So I'd have to do the math on that. All right, let's check out the screener. All right, back over to the screener here. Understand the business. That's where we started, right? They do everything around potatoes. They grow their own potatoes. They manufacture their own frozen potatoes and sell them to retailers and restaurants. That's really their bread and butter, all different types of potatoes. So if you've had French fries from a restaurant or a retailer, maybe you bought some at your grocery store, they may have come from Lamb Weston. Understand the business. So that's what they do. Growing free cash flow. And we've had several down years, actually. Not looking good for the potato industry, frozen potato, French fry industry there. Growing dividend. Yes, it is growing. Dividend payout ratio is under 75%. Either one you looked at, Yahoo Finance or stockanalysis.com, both had them under 75%, though I would like a third option, and that's why I recommend more than one source to make sure the information you are getting is accurate and up to date. Again, one had 30%, one in the 50% range. They can't both be right. Dividend yield theory says they're potentially undervalued currently. They are not quite within 15% of a 52-week low. They need to drop under $61 per share. Return on invested capital, return on equity. Only one of the two. Return on equity was over 10% at 22%. Return on invested capital was oh so close that at 9.4%. If you were going to say that's close enough to you and put a check there, I wouldn't be mad at you. Earnings per share growth was not listed, so I can't say whether it's projected to be over 5% or not. 1, 2, 3, 4. Right, they're at 4. Maybe wait for them to drop down a little bit low under 61. That would give you the fifth one to be able to throw it on your watch list. Is not on my watch list currently, but some of those boring companies like this one that deals in frozen potatoes and French fries, they are the ones that end up returning the most amount of money with the least amount of volatility because they are not really highly sought after by the overall market. So this one might be worth watching. Again, if you were to get this under the $61 per share, it would be within 15% of a 52-week low, and that would give them the check you'd need there. And they are very close on return on invested capital at 9.4%. So again, if you were to say with a return on equity of over 22% and return on invested capital at 9%, you were comfortable with it and threw a check in there. Remember, these are my screeners. You can change this to whatever you want. But it is not quite on the mind. Waiting for a bit more of a pullback to take a deeper dive on this one personally. Lamb Weston, let me know what you think of it in the comment section down below. And that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community and drop a comment down below. Let me know what you think of Lamb Weston. Let me know what you think of the video. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. I do have a couple companies out there. Some of the commenters, viewers have made comments about what they're buying that I'm going to add into the rotation here as we enter the new year. So look for those videos coming up. And again, have a great, safe, happy new year. Be careful whenever you're out there. I will have one more video tomorrow. I believe the market's open tomorrow on New Year's Eve, but not on New Year's Day. So won't see you then. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week and a very happy new year, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money, so never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice that counts as a certified financial advisor.